Hey guys, maybe it's too early. Nobody's in. Can you guys hear me? Okay, perfect. Yeah. I'll give it a few minutes, see. Mhm. All right, let's get started anyway. Um, so earlier I was actually looking for this trade here. So this double bottom. So I've been using like whenever it ranges or in the channels, like wavy, whenever it's wavy like this. So this is like pretty wavy. Um, like a downtrend, right? So it's kind of breaking down with downtrend. So whenever it's wavy like this, I like to use the 5 minute stochastics. Especially if it's aligned with like some key levels. So we're around that 6,000 levels very key resistance zone. So as soon as I seen like the double bottom here, and then it restack into those, I was just kind of waiting for the move to come. So I went in a little bit small and then I added onto the break. I did add it a little bit late. That's why I kind of exited and then took another strike. Uh, because he was heading into VWAP. So as soon as he hit VWAP, I took my exit and then went back in as when he broke through VWAP a little bit. So I just kind of went for the buck, $2 actually when he went for. And as you can see right now, we're heading to this resistance zone right here. This is pretty thick zone. So this is kind of like the target I'm looking for now. This zone right here. If he runs into here, I'm expecting he'll do this. Maybe if he's going to go. If he's going to drop, it's just going to come right back below the trend. But I'm thinking that he'll probably make a higher low and start trend change. So because we got the PBI news already, so there's really not much going on other than potential Trump news or whatever. So we can see this is kind of like a falling wedge type of pattern. So we're just broken out of it. And if you zoom out, right? If you zoom out, that looks like a fib level as well. So we take this wave from the bottom here. So yeah, that's a 0.618 bounce. So it's pretty straightforward. And I had this red line here from earlier in the week. So we did bounce off that low. If that would have broke, we would have came down to the next couple levels right here. And that would kind of void the uptrend a lot because we're still in a very defined uptrend in a bigger time frame. So right now we're just kind of testing this zone right here. So I'm thinking we'll get rejected first try, of course, and then we'll make a higher low, and then expect it to come up like this. Now if it changes, if it just come down and then it broke, once it breaks this low, it's going to flush. right? Once you broke that low, there's really not a whole lot stopping it until all the way down to here at 59 30-ish area, right? So I gave that level up earlier. This is also one ATR, right? So this area right here, very important, right? Set your alert right there for today for a short. Um, I won't be trading it, but you guys can trade that. Shit, I'll set the alert right here. Well, let me set alert for some reason. Here, I'll do it this way. Use a horizontal line, add an alert on the line, right? And on the upside, this is your target up here. This zone right here, just slightly below, actually, it'll be probably right here. Set an alert right there. That's the target area, and this is the breakout area right here. So I always set like two cluster zone because that way I know that it's actually going to go hit target and then break out. So if you have a target, set a little bit higher target so that you'll break out, you get the breakout confirmation. So if you get like two alerts same time, you know that you can just that will be a like more momentum move. So whenever it's at target zones, one key thing though, you guys always should consider to find out if it's a fake out or if it's actually going to break and go is it going to come up here from an extended position, like say, where we pull back and then come up here? If it's up here, it's likely you'll pull back, right? You'll fake you out and then you'll pull back, right? But if say, oops, oh fuck, where'd it go? Say it went up here and then it does this, forms like a handle, like a tight range. Then all you have to do is wait for the break confirmation, and then it's going to go all the way up to here, right? So that's the key. Is this once it hits your target zones, watch how close the EMA stacks to the breakout area. If the EMA stacks at the breakout area, then you get the big break. You get the continuation run, right? It very often doesn't pull back when it's set up that way. Now, if it's extended from the range and hits a target, it's like 90% of the time it pulls back. It pulls back, it fake you out, forms the higher low, and then it'll break out for real, right? So that's a very key difference. So that's something to look for. And well, and for today, I'm thinking if there's no news. We could get a scenario we get a reversion back into the mean, which is this cluster area right here. So it could, if it's going to be a consolidation day, it could just cluster right here, just like back and forth like this, right? And then it's going to form a base, and then it could either do that or do this. So you got your two big zones today. You can trade off those two big zones. So the first one, the bull size there, bear size here. Your mean is this clusterfuck here, and then and you should be good for today actually. Just with those three levels right there. And I'm on 30-minute time frame right now. Realize we get a buy signal on the stochastics. RSI had a bullish divergence before the bounce, and it started going back above the 50% line. Your MACD is flat and heading towards the zero line. So so everything is looking fairly good for a try for this high up here. One thing you should pay attention to is look at the VIX. The VIX popped yesterday, so today, if we're going to go higher, you want to see the VIX start dropping pretty fast, right? If the VIX drops pretty fast, this is the low. If the VIX don't drop really fast but steady decline, we're going to just like consolidate or climb slowly, climb higher. So that's one of the key things I always look at too, is at key reversal areas. I always look at the VIX. Mainly because if, say, we break this low area right here, and then the VIX starts shooting up like parabolic style, expect it to flush really, really hard, like yesterday, right? At the close. I was going back to review the price action when I was gone, and that's what he was doing. It was basically coming down hard like this as the VIX was shooting up sharply, right? So that means there's a lot of volatility. That means a lot some institutions actually dumping, right? That's what that was. So and the algos were triggering off for the sell off. So that's one of the key things. And I never want to try to counter trend whenever you see something like that. When the VIX is shooting up, ticks are like going into the 1,000 area and the price action is breaking down, that usually is a pretty good short play. So as you can see right here, like this level, once this level was taken out yesterday, it was done. Like it was gone. Like there's no chance you'll make a higher high after that low is taken out. It's usually a lower high. So whenever it breaks and it's come back above that line, I always expect it to get rejected at the EMAs. Like like 90% of the time it'll work out. You do get the rare occasion where like there's some type of news and then you get the full V up, but chances are if you can't get through here, it's coming way lower. So that's one of the key things that you can take into consideration next time you set up like this, right? Whenever it's a strong uptrend and then the wave low gets taken out and then it dead cats back up, always expect to get short at some point. Usually at 50 percentile of the fib levels. So that's something to look for. Let's see if this measure yeah, so 50 percentile is exactly where this zone right here, where we marked down the target area for today. So this is your target is 50 percentile right here. And then if it gets through here, expect it to come all the way back up to around this upper zone right here, like the 7.86 or 100% of the move. Right. The key resistance really this zone right here. Like you can see, it's a cluster of trading volume right here. So like since we're below it, that's very likely the big resistance point. So that's also your target. And usually you want to exit fully here and then just wait till it goes above here. Or we're extended right now. So I expect it to come here and to get the full rejection right there and then look for the retest on the higher low and then go for the second test. Sometimes the second test it goes right through, sometimes it doesn't, sometimes it just hits right there, kind of like this, flop it around, and then you'll go afterwards. It forms like a handle and then it goes. So at the usually at the 0.5, 0.618, it's the area you really want to watch closely for continuation of rejection. And the way to figure that out is very simple, is if the if the price action gets tight around there and not dropping, it means you want to go higher. But if it goes and it tries like three, four times to reject the same area and get these big long wicks, chances are it's going to reverse back down. So that's one of the key things you always look at when things like that are happening. So right now we're steady trending up. If I go into a smaller time frame, this is why you guys need like multiple monitors so you can like look at bigger time frames, smaller time frames, as well as your trading time frames all at the same time. And that makes it very, very easy. So we're extended into target, right? So once he hit here, it's very likely rejection because we're so extended. If it doesn't get rejected, what he'll do, he'll form like a handle. So this is kind of like a double cup type of pattern. Your neckline's right there, 60-20. So he's going to form right there. You could just do this and then form, restack, and then it'll go for this high right here. Possibly fill the ghost zone, right? So that's when you've seen enough of these setups, you can kind of predict how it's going to form, right? If you see the patterns enough times, there's my 10 o'clock alarm, 9 o'clock for you guys on the Eastern Standard Time. So we got 30 minutes before the go time. Now, one of the things I noticed that the 30 minutes into the open, the last 15 minutes gets very volatile sometimes. So, what he's going to do is just going to probably just do this, and then right at around the 5, 10 minute time frame, he's going to do like a shake and bake type of thing. So you'll like do this, you'll come down thinking that you'll go bearish, and then it bounces right there and just takes off. Right. So that's one of the things that I notice a lot right at the open. And you guys wonder why how I catch that first trade right from the open. That's how I do it. I look at the setup before leading into the open at the 10 o'clock mark, which is right now. For me, 10 o'clock, 9 o'clock Eastern Standard Time, see what direction that's going. And then right into the last 30 minutes, I expect you'll hit target, you'll pull back. And then right at the open, I expect a shake and then the break. All right. A lot of times he does that, like a lot of times. So when he shakes you out, make sure you have the measurements right on point so you get the alert. So like right here. So let's say you'll hit 60/20, right? If you hit 60/20, so I'm looking for about 50% or zero point 0.5. So that makes it go up here and then you'll pull back right around here on this high, right? If it comes down right here and it holds, and then you get that big tail, or you get the big engulfing candle right here, go in, boom. That's the fastest money you ever make. If the setup is there, if the volume's there, right? And you expect it gets sell off right there. So I expect that they'll go like boom and then likely rejection and then maybe consolidation and then continuation into London close, right? So like when you guys are pre-trading, you want to plan this all out in your head and have like a game plan. And then all I do is mark it down, right? And then wait for it to see if it actually happens. If it happens, you know exactly how to execute that trade, which makes it very easy to get ahead of the game when you're first like half an hour is very profitable. It gives you a lot of leverage for towards the end of the day. So the game plan, you guys, you guys took the big course. You understand that how I like to leverage my profits. So let's say in the morning I make 10 grand off the first trade. My next trade is going to be five, right? And then as I get my profits higher and higher, motherfucker, I just see my lawn yesterday and all the birds are eating it. Anyway, if the setup is there, uh, I tend to go full size on the initial trade, right? And as my second trade makes profit again, I go 150% size. And this is leveraging profits because what's the worst that can happen? Worst that can happen is I take a loss, right? And then I scale back the next trade, right? And if it works out, like if you're really good, be patient for the right setups and you scale at the right setups, right? The 150% trade is going if it's a double or triple, that's your day, your week maker right there. So, it can be really fast how you can make that snowball. But if you're not experienced, definitely do not try that because that's also a very fast way to lose all your money if you don't know what you're doing. So that's more for like an A plus setup. A plus setup, you require to have a lot of things lined up at the same time and in a predictable move. See, if you want to make money in the markets, go for predictable, right? The setup's usually pretty obvious. If the setup is not obvious, then you're forcing the trade, really. So a lot of things have to align together. So like this trade right here, for example, right? I have my double bottom. I have the EMA stack cluster right here. I have a news event coming through. I have RSI making higher lows. I got stochastics just crossing. That means that if news comes positive and it breaks through that that consolidation stack right there, that means that the move is going to be pretty sharp, right? Now, this is because it's a news event, right? Even if it's not a news event and that setup is there, I take it. Actually, I would probably take it with a bigger size, right? Because it's news event, I did not take a bigger size. Very small. But if that was a setup that I see, I tend to like to go with a fairly good amount size. I would say full size. I go in for the first trade. Usually my first trades I don't go full size. I go half size to start the day because it's more risky right at the open. But if the setup is screams out at you, I go full size because that first trade, if it works out, it's a really big trade because you're looking at about anywhere between 20 to 50% or sometimes 100% way away, right? It's really good money if it works out, but it's also a fast way to lose money, right? So that's why you have to be very certain that's what he's going to do. And a lot of times I go half size before I go full size, unless it's a really good setup. So you can see that we hit the target, right? We hit the target. We got rejected right away, as expected, right? Now I'm looking for this to test here, right? This error, and then I'm looking for it to do like this, and then continuation retest again. Um, depending what time, okay? Depending how this set up into the open. If this is set up to be like go retest right here and it does this, I'm expecting just like a short fake and then go, right? Or if we go up here and we hitting, and we tried it a few times, it just did not break, and then we're at the open, you can do this, right? You can just drop, right? You can do that, and then you might find like a higher low, slightly higher low at 0.786, and then it goes like this later on in the day. You'll probably do this, right? You know, and then you'll do that, right? So that happens a lot too. Because this is a big shelf right here, so I expect it'll take some time to get through that. And since we gave it one try already pre-market, I expect it to retry again right at the open. If that fails, expect you get a nice flush down to retry this trend before you'll maybe you'll just chop around like this. But yeah. So how it's set up into the open is really important for me. Because usually institutions like to make their move their first 30 minutes. That's why there's a reversal after 30 minutes. Remember that time frame I gave you guys? Right? In the course, certain times of day, the index tend to do certain things. That's the reason, right? First 30 minutes is a lot of institution money going in and out in position for the day or for the week or whatever. That's why that first 30 minutes can be very volatile and not really for beginners to trade because it's very hard to. Um, but it's also the area where the key reversal for the day is, right? Right at the for me it's 11 a.m., 10 a.m. for Eastern Standard Time. So that area leading to 10 Eastern, I always look at what level are we hitting at 10 Eastern Standard Time. And it's not usually exactly at 10 Eastern. Sometimes it's 15-minute difference. I know this they've been changing a little bit lately. I think it's because people were figuring it out. But right around that time zone, right? That's usually where the first reversal is. So at the open, if you get like a sharp up move into resistance and it hits 10 Eastern Standard Time, expect it to go reverse and then possible do this or possible do this, right? So that's a really important time zone, especially right at the open when it's being set up. That's why it's really, really important to know your levels beforehand because when you know that what to expect at a certain time of the day and then you know your levels, right? All you have to do is combine the two together and then look at the indicators. What is it doing? Is it extended? All right. Is it consolidating around that breakout area? Because if it's consolidating around that breakout area, that could be a that could be a breakout instead of a reversal, right? So because it tends to make a big move around that time, but usually it's the fake out. So usually they'll run to a direction and then at 10 Eastern Standard Time it reverses, right? So that's why I be looking for it. And usually that's my second good trade if it's set up perfectly. I usually when I look at A plus setups, I also line it with time of day. Because if you line it with the time of day and you expect like a certain thing happen at a certain time of the day, then you got yourself another like confluence of information, right? That you can use together to form a trade. And the more things that align together, the higher the conviction, the bigger the size that you can go, right? That's the way I do it. But yeah, so I'm looking at this as a potential right at the open. If this holds right here, we're gonna run into that and then likely a rejection, um, or a consolidation around there. And then if it goes the other way, right? If it goes down first, right? I'm looking for a higher low and then retesting this level afterwards, right? So at this higher low would be a good trade to go long, right? If it goes the other way, if it just goes up there first, this would be a good trade to go short, right? So that would be the two things we'll be looking at right at the open to see which direction we're going to first. So right now it's just kind of like following the trend. It's broken out. It's just consolidating right below the cluster zone right here. So it could just form our handle, right? Because this is a cup and handle. So it could just form the handle into the open, and then at the open we see where we go. Now the on the way up, your few key zones. This is the first really important one, of course, but after that goes through, you have a few, smaller ones right here, but right. And you can always measure this out too. So let's pretend that it goes up there and pulls back. So if it goes up there and pulls back, right? You just do this and see. Look, it kind of lines up 0.786 and 1.72 right here. So, and if things change, if it just goes above and then just come back to here at the breakout neckline. So this is the neckline. So you could run all the way up to here and come back retest neckline. And then I adjust my zone. This is just a projection, okay? Yeah, you do whatever the price will be when it does. But I'm just like, this is why I do pre-market, so I expect what levels to look at. So if I do it this way, you got the zero point 0.5 where my line is, and then you got the 100% mark where my red line is, right? So you see how they all line up together in the proper areas. So when they line up together in proper areas, that tells me that there's a very good conviction that we get a rejection up here and then we'll pull back into this retesting this breakout line and then we're going to get a continuation higher and those will be the level we'll be aiming at on the way up, right? Because this is a fallen wedge breakout right now with reversal pattern setting up, right? And in the bigger time frame, this is a fib level that we're bouncing off. On this just looks like a very standard reversion, even though it looks scary yesterday. But if you zoom out, it's actually not. It's just a normal reversion day into support, right? Because look, this line right here, that's the line that you should be worrying about today. If that breaks, then you're fucked. But other than that, you're all good, right? Because there's a nice go zone right here. So I'm gonna block. I'm gonna use a block on this. So yeah, I'm gonna set this global so I can see it in all time frames because that's the important level. And then this block right here is the go zone, right? So that means if it breaks below that line, there's a good short right here into ATR, right? If that's what's happening today, because it can't happen because you can see right here it's in a bigger let me see if I take all my drawings off, right? You can see right here it's a lot of resistance right here, right? If it's going to form a lower high, this is the area to form it, right? But so far it's looking like a squeeze up. Right? Everything momentum is kind of shifting upwards instead. So that's why I have more of a slight bullish bias. But I mean, wherever I predict right now, if the price doesn't match what my projection is, I switch over, right? I go on the bear side. So don't marry to an idea. Just understand what how it could set up and how it could work out. And that's the important part about trading. Don't get married to an idea, right? That's how you screw yourself really, really hard. All right. So what I'm looking for is basically either a break above this shelf to go higher and probably yesterday's highs, or we break down, we hit the bottom of the shelf down here, and then you get the nice go zone into ATR. So this is the clusterfuck right here. So this is basically your chop zone, right? So anything in between here is just basically value zone, they call it. It's just basically where chop's going to be. And the way that I usually trade with value zones is if it's in upper part, I look for the short. If it's in the bottom part, I look for the long. And obviously, you want confirmation candle with volume on both sides. And then I would be using 5 minute stochastics to really align it with what I see over there. So that's basically your game plan for today, and see how it will work out for you. All right. So basically right here, 60-20, 60-30 ES, resistance zone. And then you have the 59.88. So 59, I would say 59.85 to yeah, down there. And then the big levels right here, 59.60, get you to 59.32. So when I say earlier, 59.30, 59.60, your support zone, that's why it's right there. It fills the gap and then it goes into the basically the next support zone. Hmm. Ah, fuck, I forgot I had breakfast here. Probably gonna be all cold. Any questions? Feel free to ask if you don't understand that. So this is the process I go through every morning before we open, and that's how you're going to get those really, really good trades sometimes right at the open. Because you always want like a trading plan. I mean, it's great when your trading plan goes exactly as planned, but if it doesn't go exactly as planned, you have to understand what's the other side of the trading plan, right? So that way there's no surprises. Whatever happens, you have yourself a trade, and then you know exactly what to do when it does happen.
Hey Eddie. Hey Eddie, this is Henry.
So sorry, say that again. I was
Hey
just
Eddie, this is Henry.
yeah,
Can you hear me?
yeah.
Uh, are we expecting the US and China trade deals announcement later today?
I'm not sure, and
You're not sure.
to be honest, like well, Trump's tweeting about it, but to be honest,
Mhm.
I don't really think they have an actual deal. It's just how Trump always goes is always pump the market and then sell the news type of thing. A lot of times it's bullshit. Like from what the details I seen, like what they post yesterday, um, that doesn't look like a trade deal to me. Like China would never be like like they basically raised the tariffs by another 20%, give them rare earth and all of that for like student visas. Like that doesn't look like a deal that China would do to me. So I don't know. We'll see when it happens. Like the thing with Trump is if I tend to look at the other side of the news with Chinese posts instead of Trump posts because Trump tend to bullshit a lot. So and it really doesn't matter about the news. Just trade the reaction, don't trade the news. Trade the reaction.
Gotcha. Thanks, Sam. Thanks, Eddie.
Anytime news, always trade a reaction. That's why I sometimes I don't even read the news. I just need to know there's news coming, so I won't be in the trade, but I'll trade whatever happens after the trade. So I'll be right back. So you can see we're just kind of forming a handle right now, into the open. So now you basically looking to see if you'll break above or you're going to retest the low, right? See if we take that off. So I like to put out boxes um on the areas that I think that it's going to go. That way, when and also send it to globally, because that way I will see it on every time frame, right? And it's a good idea to do this because sometimes you're so zoom in to the smaller time frames, you forgot about your plan and the bigger picture, right? So it's really, really important that you understand where all the levels that you analyze are at the open, right? Before the market opens, you know exactly what your plan was. But sometimes you forget. You like you get so deep into a trade. Sometimes you just kind of zone out. I'm sure it happened to some of you because it happens to me all the time. And you forget about the game plan, right? So it's good to set notes and stuff to remind yourself what the game plan was, where the big levels are, where's the targets that you were aiming for and stuff like that. So like if I go into 30 seconds and then it start moving, and then all of a sudden I see it go into the zero zone. Oh, I should be taking my money right now, right? So, or if the price is just slightly below here and setting up into the zone, I'd be more cautious because it'll be extended in zones up here. And that means I should go smaller size because once you get into the into certain zones that the day I call them more danger zones because you can still go into your direction, except for you can reverse at any time, right? Those are the times I tend to scale down, take my profits quicker on the first sign of weakness, right? So it's one of the things I'm more risk diverse. Like I know when to take big risks when I should be taking big risks based on probability. And if the probability is lower, I tend to take a lower risk, right? You never want to take the same size all the time because that gives you average performance. But if you know how to scale up, once you scale down, that gives you the super performance, right? It's a huge, huge, huge difference. And I never understood that till I actually got trained by somebody else that taught me that. And ever since I did that, holy fuck, Austin, like huge difference in P&L, like huge. I mean, I'm taking the exact same fucking trades, but the money wise, the P&L wise, is ginormous compared to what I was doing before. If you guys started with me in 2022, oh, 2020, you see that like my scale was about for day trading was about what was it, four or five figures a day kind of thing. Now I'm hitting like six, right? Sometimes you get the big seven, but it's mostly six, five or six. So it's a big improvement, right? Because I knew how to trade, right? I just didn't know when to size and when not to size properly, right? And by proper, I don't mean like YOLO just because it's a good setup, right? Proper meaning I have profits, I have X amount of profits. This is a really good setup. How should I scale this into so where I not risking too much of my own money, right? That's that's scaling, right? Not because I have $1 million, I should throw 500 grand into this thing, just because it's setup. It's not like that whatsoever, right? It's I have X amount of money, so I have $1 million, right? I put 50K into a trade. I made say 25,000, right? My next trade, let's see a really, really good setup. Normally I just go use the 25K, which is just my profit. So I got no risk for the day. But because the setup is A plus, I use my original 50 plus my 25, and then I'll still risk the original 25. And then say I made this trade, I double it. So now I have 150,000 in profits, right? Now I have 150,000 in profits. I don't need to use anything close to that for my trade because my original size was say 50, right? 50,000. So I could pocket 100 and now I start with 50,000, and then if I make money on that 50,000 in the next trade, I'm going I'm gonna keep adding all my profits onto this 50,000 because there's no way I can lose money today. Right? I'm gonna pocket 100K no matter what. But if this 50,000, if I trade it 10 times and then it grows into say 200 grand, for example, I'm gonna use all of that on an A plus setup. And then if it's towards the end of the day and the levels are cheap and I got 200 grand in my hand that I can risk, holy fuck, that's how you make $1 million, like in one trade. That's the secret sauce. I'll go into more detail with some of you guys when you guys are ready for that. Like a lot more detail. That's just kind of the brief of how I kind of did this, and I kind of refine it in the last 2 years or so because I've been training this full time every day now for the last few years. So it gave me a lot more time to learn, adjust, and refine. Yeah, I mean, I'm not trading like a normal person. I'm literally there all day, every day until open until close, right? Unless I have a doctor appointment. So that's how you get like so many reps in. You kind of see like the matrix, as you would say it, right? So we're into the open. So let's watch how this goes. Let's see if it goes into plan. So you see that we're flagging into it. So I'm expecting either a pop into there and then reject it, or we're going to reject first. If we reject here, this is the buy zone right here, and then it'll pop back into retesting this zone. Or just watching eat my breakfast. 80% chance of September cuts. Okay, so we're gonna go up first. Watch this area for possible rejection. If it breaks through this area, expect it to run all the way up to here before rejection. So you're seeing first time rejection right there. I'm going to smaller time frame. I like 30 seconds. So you see the rejection, right? So far, off that level. That's the neckline. So I'm watching the 5 minute on another time frame. But just wanting to see the action as it's happening. So it's coming back down, right? So now I'm looking for it possible to see if you'll break this low. If it break this low, you'll go to rewalk. If it holds here, it's going to retry. It's basically forming the handle right now. So the easy trade was just that. I would have traded that, sold it into the neckline, and then wait to see what happens at the neckline to see if I go for it some more. So now it's coming back down. I'm waiting to see if it holds. If it holds, you may go for neckline one more time. No, it's coming. Watch that area. The VWAP would be the lowest part that you can go to form the higher low. That's predictable for a trade up. So that would be the 6,605 area. So it'll be around right here, this zone right here. Let's use this level. Yeah, 0 0.5, 0 0.618. So far it's going as planned, right? Remember, this is the handle forming. So it can stay within this range or it can come down to be expanded. But as long as it's above this area, it's all good. So let's go back to the 5 minutes so you can see more clean. So you can see right here, right? It's the cup. This is the forming the handle. That was the fake out I was talking about, the test and fail, right? So right here is a big cluster of support right here, right? Because this is the low of the shelf, right? So as long as you can hold and flop around a little bit and then retry, it's gonna go for that neckline one more time. And if you can go through that neckline, then we're aiming for here, right? If it doesn't, um, it's likely you'll come back and retest the 50 percentile area. And then if it holds a higher low, that'd be a better entry for an up move. Right now, it's just kind of doing this thing because it's still in the handle. Looks like a lower high. Let's see if we get into this zone right here or not. So the handles are basically you should be training them. It's tough business at the handle. But what you want to look for is the setup at the handle going into the break. Usually you want to go in small and then at the break confirmation of the break, that's where you go add on to it. But this coming down, I wouldn't be adding to a short precision. I'd be more looking for reversal back up because that's basically the game plan, right? Was to look to see a whole 50 percentile. If it holds above 50 percentile, you'll go higher. So we're into the support zone here. So we have to see if we hold this area. 1 to 5 minutes. Hmm. Momentum's rolling over a bit. So just give it a little time. Back into 30 seconds. So he's looking somewhat of a basing pattern, but it's still below the EMA and the 30 seconds. I'm also looking at ticks. So you want to look at the ticks to see if the ticks can go above zero, and then start going into extreme ticks. That's when you know that it's going to be a sharp reversal if it goes that way. If it just gradually goes positive, it just means it's trying to shift trends. So it's at VWAP and they're showing signs of support. Yeah, so there's an engulfing candle right there. See if it can hold above. Starting to look good now. Waiting to see if it'll cross above. Across. Yeah. So there's some volume coming through. Hicks are going to zero above zero, so there. I would have took the trade. All right. So let's see. Aiming for 50%. That's the neckline. This zone right here. See if it'll go through. If it doesn't, you'll get rejected one more time. So that would have been a scalp from here to here. You probably would have got like a buck, maybe two, depending what's delta you're going after. So it's looking good right now for a continuation higher. I shouldn't have closed my TWS. Food always makes me feel better. Just remember resistance up here, right? That's the neckline. So sometimes it takes a few tries on the neckline. there's a gap. Looks like on SPX is a gap, so aim for the gap close at 60-20 ES. I mean SPX. So he's retrying the neckline again. So usually at the neckline, I like to trim, and then I just go back in with a different strike, like a cheaper strike. If he gets run, if he went too far, breaks out too far, I just go in with a cheaper strike. That way I lower my risk if I'm wrong, because I can do a quick exit for a smaller loss, right? If I'm wrong. If I'm right, it's gonna go in the money anyway, so it doesn't matter. Seeing see how he's trying here a couple times. This is the third try. So I'm looking for a higher low now, right? I'm looking for a higher low and then the break. Stop eating all my seabird. So the handles sometimes do take a few tries, and it does take a little bit of time because it's basically um try to take out supply. So it's kind of slowly just kind of takes out all the supply. So all the sellers come in. He has to absorb all the sellers by the buyers, and the buyers have to take over, and then it breaks out. That's usually how it happens. That's why it takes time sometimes. But so far it's looking good. It's going to go for that gap fill at 60-20. There's big resistance at between 60-20, 60-30 SPX. So SPX, how far away are we from SPX? So about 6 points difference between ES and SPX. So wherever I say on SPX, just add 6 points onto the ES. So basically this zone right here actually, and basically that's where that's the same thing. Gap fill right there. Expect a little bit rejection up here, at the red line up here, or even right here, because we this move was extended from VWAP. So it needs to overshot a little bit and then come back to retest and then go higher. Yeah, it's going exactly as planned, right? From this pre-market analyst, right? Hits the resistance neckline, tests this VWAP. This is where you buy. Goes where to run, retesting the high. Potential pullback for continuation to the next one, and then this is the big parabolic move up here, and then likely rejection up there. So let's go into 5 minutes. So we can see very clearly we're at the neckline, right? So this is a rejection zone, obviously. And then if it goes through, this is the tough area to get through because there's so much supply up here. So you see it's pulling back again, right? After hitting that neckline, because we were extended away from the VWAP area. So I'm kind of looking for it to come back. Anything above the zero point 0.5 is all good. So anything above this area right here, look for color change, even up here. But yeah, the candle has to close. We're at 30-second time frames. Hymns is good there, Julio. Hymns. Hood's being set up too. All right. AVGO is looking good. Nvidia is looking good. I think we should get continuation. Microsoft looking good. Even Tesla's looking okay. Meta's the only one that's kind of Apple's dying. Right. So it looks like we're gonna come down to like 0 0.5 area, I think. If it fails this low right here. Not still holding. That 60-30 area is going to be a hard rejection, I think. So he's holding and just keep going right here. So aim for that 60-30. Oh, I suppose 60-25, 60-30. That's where the gap fill is. It's trying to go. It's going to go. Close good too. 10 minutes before 10 p.m. I mean 10 a.m. There it goes. So you got 10 minutes to run, fill the gap, and then at around that time could be a reversal. Could, right? So we see it's rejecting first try. If it gets through here, it's going up here. So that's about 10-point move if you can get through. There's 10 minutes before the time. If we come back to the 8 first, because it is extended, right? On the 5 minutes. So this is the first resistance. As you see, we're heading into a shelf, right? If you can get through this shelf here, you're basically looking at it to go into the extended target rep here if you can get through. So you see the flows very strong. A lot of call buying. Uh, oh, Oracle has good news. TeamU used them for cloud. They say it's a gigantic package. So Oracle might be a play today, actually. So actually, there's a lot of call buying today, so it's the flow is strong. Expected to go. Oh, there it is. There's another attempt. It looks like you may go this time because ticks are getting stronger. We're in the overbought territory, just so you guys know, meaning that anytime we reverse, uh, that's why like when I'm trading on this, I tend to just switch contracts. I exit the big contracts and then go into the smaller ones, and I take profits and then just let runners go through. That's what I do. Doesn't mean you have to, but that's what I do. You do miss out quite a bit of profits, but it's fine. Like I usually just go for base hits. I don't really care much about the home runs, other than the lottos. I like the home runs on the lottos. They're fun. But when I'm using bigger contracts, I never aim for home runs. The reason why it's too expensive for that risk. So what I normally go for is base hits, like anywhere between $1 to $5 on the contracts. I'm good, especially when it's near resistance zones. We just broke out neckline, just so you guys know. Broke out neckline, waiting for the candle to close. So you're almost at target at 60.30. And that's almost gap fill on SPX. Once it does fill, we're heading to 10 o'clock, right? That's when it's probably just going to fail and then gets rejected, right? Because we are extended, just so you know, because we bounce off VWAP, right? If you look at the 5 minute time frame, we're four green candles in, so usually that's a good area to take profits. First three candles are a given. The fourth candle, fifth candle, kind of as the each candle goes on, you have more risk. So just so you know. But yeah, this is the target up here, the extended target. But this is the low key target that we just hit right here, 60.25. The full extension 100% is up here, 60.35. Actually, I want to move that a little bit. Look at that, like remember the projected earlier, went before the price move. It was really close. It was just like two points off. It was really close to those areas. See, this is why like I do pre-market analysis to get some short projections so I can mark some hypothetical levels in there. And then once you start moving, I just readjust the fibs and then you get the actual levels to see how close you are. I'm gonna take that off now. Um, so we're showing signs of weakness at 0.6 18, which is that first target, right? And then if it breaks through here, then we go for the 4 extension, which is the 60/30, can go as far as up here at 1.272 and 1.618 would take you all the way back up to the high around 60/50. Everything's still looking good. Internals are good. The wave is still good. It's just that we're towards like that upper part of the handle. Uh-oh. Once you consolidate a little bit, let the EMA catches up. If it doesn't fall, let the EMA catches up, and then it's gonna go for the next big move. If it's going to reverse, it will be reversing like around here. If it's going reverse, and and because the flow is so strong, I'm just looking basically like a retest for reverse. Retest of this area right here if it does come down. But so far it's holding quite well. It's holding cup. It's just basically right at the neckline right here. So it just needs a little time and then it can probably go. So one thing I do look at is the mags. With the price action and half the mags are down. So it's basically what's holding it up a little bit. The only strong one I see is like Microsoft, Broadcom. Nvidia's doing all right, but Amazon's flat, so that looks like it's going to reverse soon though. Google still in downtrend. Apple dead. Meta's weak today actually. Let me take a look at Oracle. See what that's doing. Carvana is finally dropping. Might be a short soon. Oracle. Oracle has a strong charge. Yeah, I would say like this is fairly strong resistance because you can see like all the supply up here, right? It really has to get through like this supply zone in order to go through the ghosts and go up here. So the gap is it's not quite close. It's still like on SPX it's not quite close. It's go on SPX. So it's like a point. Yeah, it's like 1 point away from closing, and it didn't close before the pullback. Whenever it does something like that, it makes me like think like like market makers kind of use that as a hint to tell their friends like we're gonna go higher later, or leave like one little bit so your OCD will make you come back later. The last few times the gap didn't close and left a little bit on there. That's what happened. Like somewhere along the way, like towards the end of the day, if he goes back to fill the gap. So it's just at the neckline. It's just retesting this neckline of the breakout. So, but like I said, it's a lot of cluster up here. So it'll take time to digest all of that. And then once it digests all of that supply, then it'll take off and go into the next zone, which is up here. Hmm. So if you guys missed this morning, we had like a pre-market game plan. We kind of pre-drew the plan that said that if we go towards the to form the handle, it'll retest and then come back retest rewap before going higher. So that's exactly what it kind of did. It went up, hit the neckline, came back to rewap, and then exploded up. So now it's kind of just forming the second handle here at the neckline, and then probably digest all of that, and then it'll likely go higher. The only reason I have a bias it'll go higher is because the flow is actually very strong. Um, if the flow was negative, then I would be more leaning towards a big sharp rejection. But where the flow is positive, I tend to look for a bullish bias because that's the direction everybody's buying. So it's kind of you see like we're on the 5 minute time frame. You see like how EMA is catching up now, catching up to your price and start moving off the EMA. Whenever it's in a strong uptrend, um, that's what I look for is that. But as you can see, like we're overbought in RSI, stochastics, and momentum indicators and MACD, right? So we're at that upper resistance zone. So usually up here, like I don't hold it until it breaks, really, because your trade would have been like from down here to that area, which you should have choked, right? Um, and that's basically the play. And then right here, you kind of have to let it cool down, let everything cool down a little bit, go sideways, and then go for that big pump. Yeah, I'm thinking a hard rejection up here at that 100% FIB area. It's probably going to be a hard rejection when it gets up there. So around this area here, basically what you need to do is just keep an eye on that eight, right? And then once he breaks that candle high, he's gonna go. You got about 10, 15 points if he goes. If he can hit 60-30 on SPX and then he can hold up there, that's a trend change. So we could go back up higher after a consolidation or pullback or something like that. Probably towards the end of the day, if that happens. But that would be like, uh, that would be like your basic target for today. If it goes up that high, that's basically where your target's going to be. And right here, if it doesn't hold up here, you'll pull back, retest at 21 before going higher. That's 3 wicks already, so it could come down first. Yeah, I was saying Apple's really weak and Google's weak today and Meta. So that's probably what's going to drag it down. So see, I don't like it when they're not all confluenced together, the mags, because they're such a heavy weighted on the index that if they're not confluence together, they tend to like have a lot of chop, right? So it's I don't know. I don't really like how SB 500's so heavy weighted now on just a few stocks. It kind of makes trading a lot harder, and you can't use it like internals like we used to, right? Because they make up like close to 30% of the index, just those 6 stocks. There's the bounce there off the 8. So we're going for that target. That was a heavy candle on the volume side too. That's a heavy volume candle. So we're just going to go for that push there. Yeah. Oh, Besson is going to be on again on budget and tax reform. Hmm. And that guy never gives you an answer. He just keep talking. Every single time he does a testimony, everybody like bitch at him for say yes or no. All right, that's 0.786 here. Still got a little bit more room to go. As long as it holds the 8, you're all good. You just keep following the 8 on the 5. Ticks are still above 0, you're all good. Um, Everything's kind of like overbought, so it just tells you that we're near the end of the wave. That's all it says. It's near the end of the wave. Doesn't mean it'll reverse right away. It just means it's near the end of the wave. And Amazon's actually trying to reverse here. Amazon, there's a nice base on Amazon if you guys want to take a play on that. I'm just looking at my big watch list there. Yeah, Amazon has a base. Its neckline is at 213 and a half, and potential target would be like probably 215. Broadcom's very strong. Are you in that, Julio, still? Broadcom's having a nice fat candle day. I use 15-minute charts on the watch list because that way I could see the bigger picture and I could see the price action a bit. So we're still going. We're almost at target. This is second target. The third one's up at the just slightly above that at 60-50, 60-45, 60-50. I don't know if we'll go that high, but it's looking good. It's looking good for this one. The next level may be a little bit harder since this is the top. This would be the top of the shelf right here. And then above that is the ghost zone. So if it goes into ghost zone, you'll go all the way to that 1.272 area. The flow is still good. 30-second looks like a flag to me. Watch the 30 seconds. See if there's a volume candle come through. If there's a volume candle come through on this flag, it's going to go to the next level. It is extended away from 8 right now, just so you know. So it could just go sideways a little bit, let EMA catch up again before the next leg up. This is like a slow grind type of reversal pattern, right? You see how these patterns work out so nicely, and you see how this wedge is so long. The longer the wedge, the higher the breakouts, right? So I expect then like the next couple days will be bullish if there's no news, obviously. Because once this was broken through and then a retest and held VWAP, that was it. It's right at top of the shelf now. So once it breaks above like the 60/30, it's nothing but goes on till 60 40, yeah, till 60/40 5 or so. So if this goes breakthrough, it'll go to 60/45. But this is a pretty strong resistance because it's been tested multiple times up here on the way down and failed. So it's likely that's the top of the supply shelf as well. So try to aim just not like normally if I'm up here, I take my profits anyways already because it's so close to target, and we're extending obviously from the base. So yeah, I would say aim for here, and I would call that a day. Over here we goes up through here, then there's a ghost play right there for a smaller size scalp. But other than that, like the easy play was the pre-market setup, right? The jump test, move up, bounce, hit targets. Well, look at Broadcom go, still going. All right, I think I'm gonna call it a day here. We pretty well uh hit our targets, went exactly as planned from pre-market analysis. I'll upload this into the course. So if you guys missed this morning on the pre-market, you can rewatch it and see how it played out exactly the way it did. We kind of because this pattern we've just seen it so many times. It was fairly easy to predict. If I had my TWS open, I would have so traded that at the VWAP. All right, I'm gonna go. So I'll probably back in maybe 2 or 3 hours. I just need to take a little rest there. My head's kind of exploding now again. All right, target hit, 100% fib extension. Have a good day, guys.